Good morning. Good morning. Oh, here we go again. Raj, how are you, brother? Omar, you're up. What's going on? Hey, Sam. How's the land down under? And we're welcoming all the folks who are joining us on YouTube this morning. Good morning. Good morning. Hey, Super. What's up? Good morning and welcome to the room. It's good to have you with us. Okay, let's dig into this puppy. See what we've got to deal with. So, right now, we've got our overnight inventory was short. It's still kind of short. Let me make this a little bigger here. So, what this whole short long business is, and a lot of people are like, what the hell are you talking about, JJ? The close of Friday's business is what we look at. And then we look at the trading in the overnight session to see what sort of distribution. That's all this is, distribution of material, right? As Squirrely says, expensive crap. We take cheap crap and turn it into expensive crap, right? That's how markets work. This is commerce, and it's a beautiful thing if you're the seller. Okay. So imagine if you were long 20, 30,000 contracts under 72. Well, you'd be laughing right now, right? You'd just be happily selling them into month end, quarter end. Your quarter looks good, right? You look good. You know, your wife gets a new Range Rover, right? Your clients are happy. They send you more money, right? You can start thinking about upgrading that new plane. You know, this is how it works for these folks, right? So, anyway, overnight inventory, most of the trading is underneath the close of the previous day. So, we look for a corrective move higher. And if you take a look at the market, you'll see that's exactly what it's done, right? Overnight inventory, here, I'll make it a little bigger again. Whoop, sorry, guys. Sometimes the Sierra chart has a mind of its own. I don't know why it does that. Okay, so overnight inventory gets short. Now, this serves two purposes, right? It allows those traders who got short in the previous day to come in and do some covering, right? It allows overnight trading is very simple. Well, people will talk about Asia and London and all of this stuff. Overnight inventory is all about getting stuff done under the cover of night. So if you got short, right, yesterday and you got trapped, this move down allows you to come in and do some covering, right? If you were long and overnight inventory is long, you get to do some selling or liquidation, okay? It helps dealers and wholesalers move inventory or buy inventory, whatever they need to accomplish. We try and trade with the flow of those people because they see the order flow first and then they react to it. So we react when they do. Remember that song from the 80s? When I move, you move, just like that? It's the same thing, right? So we already had a correction to overnight inventory. We tagged the close. And guess what? There's sellers at the close. So we sold back down, right? Really simple. We are in yesterday's cost basis. That's value area high, which is the top of the cost basis. This is value area low. These are market profile terms. But value area is just a fancy way of telling you where 70% of your inventory is priced, right? Hey, Mattis, welcome, right? So this just tells you where the distribution was from yesterday. And the other thing is, since we're in yesterday's cost basis, right? When yesterday's range and cost basis, so it's business as usual. There's no change. If we start getting outside of yesterday's cost basis or outside yesterday's range, then there is change, right? And we as operators in this market must be aware of change and adapt to it. This is, no, it's just 70%. Look, okay, so you take this, it's real simple, right? This is yesterday's distribution. This is where 70% of that distribution is priced. Outside is that 30%. That's all. Real simple, right? So the majority of the inventory is priced between 5,800 and 5,819. Simple. Simple, simple, simple. Now, unfortunately, market profile, when it's taught traditionally, is a little complicated. My attempt is to take market profile and take the information that we need to make money without having to go and get a degree in statistics, right? Okay. So let's go take a look and see what happened yesterday. Okay. Yesterday, we had, Travis, we did have a price probe, but guess what? It was worthless. So if we had a price probe in M period, which is the last half hour, right? Obviously, it didn't hold because as soon as we got up to this 58.25, the people who were long here, they piled in and sold into it, right? So wouldn't you say you were long 5,000 contracts here and you were a wholesaler and price went up here in the end of the day where you're like, oh, I'm going to hold that 5K and chance it overnight? Or am I going to liquidate? What do you think? Right? Remember, we have supply above us. We have supply above us. Just because we have a gap, yeah, you got to sell it, baby. You got to turn that inventory into cash, right? Look at all of this supply above us, right? As we get up to 58.24, look at all of that, right? You better sell, right? Right? As a trader, your job is not to invest in the market. Your job is to sell, baby, sell, right? You're supposed to liquidate. You must liquidate. You have to turn inventory into cash, right? We are not long-term players. Do we want to hold trades longer? Of course, everybody wants to hold trades longer. Now, what do we have? We have a poor high. What does that mean? That means that sellers are competing at 58.16. So anytime we get up to this level, bam, 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 they're going to start hitting you, right? So if you were long on this move and we got up to that point of control, that's where 70% of the value area is priced, right? So there's going to be some supply, there's going to be resistance. Supply equals resistance. Lack of supply equals support. Okay? Very simple, right? If anybody tries to tell you any different, they've never traded out 5 million shares of stock in a day. A poor high, no. A poor high is a market profile term. You see how these two letters are at the exact same price? That means that there was competitive selling there, which means if you were shorting that, you'd put your stop here and then, you'd put your bids in there to cover, right? So when you see a seller, that's when you short. When you don't see sellers, you don't short, right? Yeah, sellers will stop selling size when they see large bids because you want to make the market go higher so you can sell your stuff at a higher price. That's just commerce. That's all. Okay. It still applies. Listen, Matt, I came up through the sewers of the penny stock world. Okay. It's all distribution. If you got 5 million shares of stock that's some pink sheet piece of crap, well, if you sell those 5 million shares at 30 cents, you're styling. Hell, even if you sell them at 10 cents, you're styling because you probably got them for free. No, the less time spent means that there are people selling here and they're competing. That's why the price goes down, my friend. Don't worry. It's your first day with us. I repeat these concepts like an old man over and over and over again. So you'll get used to it if you stay with us. Okay? Right? And that goes for everyone who's just joining us. A lot of this stuff sounds really weird because it's common sense, and common sense is really not taught in trading, right? So let's go take a look and see what kind of trades we can squeak out of this thing this morning. Now, what I do to trade this, I don't trade off market profile. I get my information off of it, right? Then I go and I find a balance zone, and my balance zone is 5805 half to 8. It's kind of small. It's a small range tonight. So I see the sellers stop selling here. That creates demand. This is where they initiate their sale, right? If you're a seller, right, you sell because other sellers are selling here. And then you guys stop selling here. This is a nice trade, a look below and fail. Then it tags and it rotates all the way up. It's a smaller range, so your trades are going to be tighter tonight, right? So a lack of supply creates demand. Now I want you to think about this. What happened in COVID when there was no toilet paper? Creates demand, right? It's not a dumb question because people don't teach you this. In school, in the media, in life, they teach us how to be buyers. They teach us to stand in line to buy something we don't need, right? They teach us to line up to buy things. That's called marketing, right? Nowhere do they teach us how to sell 5 million units of something and walk away with a profit. That's not taught, right? We're taught to be buyers. We're not taught to be distributors, right? So markets are to distribute size into demand that is created by marketing, right? That's why there are three dudes sitting in a room somewhere going, "Ooh, what kind of product that can we create that we can get these guys to buy? Oh, crypto's really hot. Let's do this. Oil and gas is really hot. We'll do an oil and gas deal." That's how product is created, right? It's just all product. This is just a sales chart. Exactly, Kenny. Nailed it. We are taught to buy things we don't need with the money we don't have to impress the people we don't like. Exactly. Right? But it's true, right? I'm trying to teach you guys how the sellers think because the sellers control the market, right? The buyers are only in control when the sellers are competing. You know what? I've never seen that movie. I'll have to see it. Okay, so we're right back to balance. Had a little distribution, right? We're not ready yet. We don't have the order flow to take price over 58.13. So if we were on a little earlier, this would have been a nice trade. Now I've just marked out my levels. I want to see if they work. So of course, hindsight is 2020, but when a market looks above and fails, see, there's the first one, there's the second one. You can see that there's a seller right there, right? Check it out. You can see that, oh, there's a seller right there. So if you have a seller there, then you can short once it gets under 13. 13 is your warning level. 13 half 14 is your stop. Cover sub at 10, cover the rest at 8. That is the look above and fail. You short the back end of the move. You don't short this, right? You don't short the front end of the move. You wait until the sellers reveal themselves, right? That's why you don't waste all your bullets shorting this. You wait till the seller reveals themselves. They're right here. They're right here. They're here. They're here. They're here. So there you can short and let them sell into your bids. Okay? That's how professionals do it. And now we're back. Think of this as an auto dealership, right? Right? This is the car lot. This is where we took the cars, sold them, they returned the cars. Now we're going to clean them up, see what kind of buying comes in, and wait for the next trade. You don't have to worry about trusting the buyers or trusting the sellers, Sing. That's why you have a trade setup. So say, for example, say I was short here, right? Well, we don't know what they're going to do on the European Open. We're 13 minutes away, DJ. Brother, we still have 13 minutes. I have no idea what's going to happen in the European Open until it opens. Try doing that because everyone's like, this is going to happen, then this is going to happen. Like, what are you, a genie? You're not a genie. Just let the market tell you. Just relax. You don't have to be first, right? Just relax. Take it easy. Don't have to get all hyperactive, right? The market will tell you, right? And if you have a trade set up that fits what the market's telling you, boom, right? You execute ruthlessly. As soon as that trade's not working or not making any business sense, boom, you punch out of it. Right? There's a business reason for a trade. So for example, if I was short here at 12 and a half, 13 is my warning, 13 and a half is my stop. Okay? If the market started offering over 13, uh-oh. If it's, and then that's where I scratch the trade so I don't lose that much money. Right? So let's do it right now. Right? Let's go check it out. So say I was shorting here. Say I shorted 7.5, right? Well, now it's creepy close to 8, and now it's offering over 8. If it offers over 8 and stays offered over 8, then I know, see, look, I know that trade, the business reason for that trade is not working out for me, right? Once the business reason for the trade goes away, so do you, right? You take your ball and you go home. Your ball is your capital, right? You don't ever trade when it does not fit your business setup. That's what a trade setup is, right? An A+ trade setup is a repeatable business practice that takes into account risk, and your risk is built into your trade setup. So let's say I was thinking, okay, you know what? I want to go long, right? I want to go long this because it's a look below and fail, right? So say it's look below 5808, fail. Say I'm a buyer here, right? If I go in and I put an 8.25 bid in, right? I know there's a seller here, and I know there's a seller here, and I know there's a seller here, right? So if I am long at 8.25, right? My stop's going to be 7.75, right? It's not going to be a huge stop, or maybe 7.5 if I want to give it a tick to work, right? So you're long 8.25. Well, there's going to be a seller at 9. Let's see if we can get past 9. This is what we call an inventory correction, right? So if that were to happen, we're looking for 9. Now, if the ranges were a bit bigger, then you could spread out your sell orders. How do you know there's a seller there? Because that's where the top of the candle was. The top of the candle, my friends, is where the sellers initiate and compete. How do I know that? Because I was the top of the candle for 25 years. Takes one to know one. All I've done my whole life in finance is sell you stock. We used to sit and dream up ways to get you guys to buy hundreds of millions of shares of stock, right? So I happen to know a little bit about distribution, right? You take a stock up, you open it at 30 cents, you take it to 80 cents. You build a bit of support there because you don't sell too much, right? Then you pay brokers to come in and get their clients to buy it. Then you do a promotional program. You take the stock up to $2 and then you sell the crap out of it all the way back down. And then you start again, right? It's all about distribution. That's what Wall Street is. It's just a distribution network, right? Squirrely, we may know each other from another life. Were you a promoter? Hell, you might have been one of my clients. Oh, okay. No, we don't know we have buyers yet. That's just where they stop selling. There are some buyers there, so they stopped selling, but I don't want to count on that, right? All I count on is that red line, the offer. So I'm long 8.25, stop 7.5, and where am I going to put a sell order? Well, let me go and put a 9.25 sell order in, because if it takes out that 9, right? Let's see. If I was 2 contracts long, I'd sell one here, and then I'd front run this 10. Oh, okay. Sometimes I wonder, sometimes I wonder if I ever run across people I met from the old days. Mind you, I've been in the business since 92, so it's been a while. So I didn't start out as a trader. I started out as what they call a phone chimp, right? I started out in 92, 93 as a phone chimp. I was what they call an opener, call people, ask them if they're still interested in the information. Look, do you guys see? Look, do you see those 3 tops of those candles? Sellers right there, right? They're there, they're there, they're there, right? And if you are a size seller, when the market goes back up, are you going to sell again here? Hell yes. And here? Hell yes. Right? Yes, someone is selling there. Bingo. Now, do you need any fancy software to tell that? No. It's a simple 1-minute candle chart. If the offer lifts above 8.75 and prints 9, I know that the sellers saw some buyers and are raising price. It's that simple. If the sellers do not see any buyers at 9, right, they'll move the market lower. Hey, Ari, how you doing, brother? Exactly. Focus on supply. Don't worry about the demand. We'll take care of the demand, right? You guys just worry about the supply, right? See how the offer, you just can't see the bids dropping, the spread's getting bigger. Now the offer comes down to fill those buyers. Then it lifts, then it goes down, then it lifts. This is not an ideal trading situation. So I'm long 8.25 on one micro, and I'm like, not the greatest trade, right? But market awareness. What is our market awareness? Tonight it's slow, tight profile, big short squeeze from yesterday. Nobody really wants to come in and buy. So how do I manage my expectations? Well, I'm going to trade micro, I'm going to trade small, right? And I'm not going to expect the world, right? It's always important that we go back to basics. You always have to go back to basics, Dave, and that's a very important point, right? Especially when markets change. If you start trading like crap, go back to basics. That's why I like this look below and fail trade, because this is your money earner, right? If that trade, right, once you perfect that trade, and it's a lifelong process, right? In a nice normal market, you'll get a look below, you buy that 8.25, sell a little at 9.5, sell a little at 10, sell a little at 10. You make a little money there and you're done. But this market is telling me that, hey, this is not so good, right? So sellers competing means the price is not going higher, right? And I'm going to get stopped out in about 2 seconds here, right? I'm out, right? So no hissy fit, right? You don't get upset, right? You know that you were trading at a time where it was not optimal. So you should not expect to make any money off that trade. So what is the logic of rotation? It's not logic, it's the business of the rotation. So take out logic, right, Mr. Spock, and just put in business. Markets rotate lower when they're looking for buyers, they rotate higher when they're looking for supply. Very simple. Very simple. I always start my day with the micro. Why? Because I don't trust myself and I don't like losing money unnecessarily. So there, I just lost a point, right? Which is $5. That's the cost of doing business. So now I'll just chill out and wait for better order flow, right? I like trading ES because I trade one thing every day. I get to know it inside and out. I'm 57 years old, so I really don't want to trade NQ, right? It's a thin market, right? It's a very thin market, right? And large and any small, you breathe on it, the price moves. People like that, young kids like that. It appeals to the Red Bull energy drink vaping crowd, right? Some people trade it well in our room, and I don't begrudge them, but I'm old and I don't need the stress. If I want stress, I'll go do deals. Then I will get compensated for stress, right? I don't want to make $500 a day and be stressed out. If I'm stressed out, I need to make 50, 100, 200 grand a day by selling stock, right? With the ES, I know when to trade it. I know when to stay away from it, right? I wait for my setup. I understand the nature of the market, right? I'm intimate with the order flow, right? So I don't lose a lot of money, right? In this business, the trick is longevity. I have seen people burn out, flame out, make 60 grand in a month, lose 120 the next month. I've seen people lose millions of dollars, right? Just make a little bit every day. If you can't make a little bit every day, just sit and wait for the next day, right? A hero ain't nothing but a sandwich in finance, right? See, if I was still long, I'd be hurting right now, right? There's London. Let's see what they do, right? Woo. See, that seller's still there at 8 3/4, eh? Look at that. Seller is still there at 8 3/4. So London came in all hot and bothered. What was the net effect? Bupkis. Nothing. So if you're an emotional person, you jump in, you go long, you go short, you're stopped out. Here you just like let them beat each other over the heads, right? This is the algo mosh pit, right? Anybody remember mosh pits from the 90s? Yeah, a lot of people think that just because the thing doesn't move, but I mean, I've got guys in my room who make sometimes 30, 40, 50 grand a day off the ES, right? And I've got one guy who regularly does 2 to 4 grand a day doing exactly what I tell him to do, right? It just because it doesn't move as much, and I'm telling you, it moves pretty good. If you're aiming for $200 to $500, come join us in the room, Squirrely. Check out our free trial for 7 days. I promise you'll learn more in 7 days than you will in 10 years anywhere else. Yeah, sure, no problem, Sing. Just DM me. I'm on X, VWAP Trader 1, and our room is microefutures.com, right? We only charge $39 a month, right? So we try and keep the room cheap because we know it takes people time to learn. We also have, I do one-on-one lifetime mentoring, right? Which is a one-time fee and you never pay ever again for anything. But, if you're young or if you're just starting out, the room's a way to go, right? You've got to spend money on education. And I promise you, I will not teach you garbage, right? I'm also the kind of educator that if I don't know something, I'll go and find out. I won't BS you, but if it's not critical knowledge to making you money, you're not going to learn it in my room, right? He trades size. He'll trade 20. Sometimes he'll trade 50 contracts, 100. But he's got a $4 million account. And it just didn't happen overnight. Okay. You can't, that takes skill, right? It takes skill. The other thing, and I hate to say this, is you have to be able to follow simple instructions, right? If I tell you do this, this, and this, and then you go, well, I changed this and this didn't work for me, and right, it's not going to work. You have to be able to follow simple instruction. What tools do you use to trade? You're looking at them right in front of you. A 1 minute candle chart and market profile. Right? Market profile just to tell you, yeah, but I don't trade off TPO. This just tells me where the inventory is. You don't have to have it, right? Yeah, all you need is this. You can trade in Sierra chart. You can use Sierra, Ninja Trader, whatever you want. I'm not software dependent. You don't have to use Sierra, right? I've just been using it since 2012. I hear good things about NinjaTrader. I'm going to give that a try. You know, I use Sierra Chart. That's what you see in front of you on the screen. You have to pay for TPO and Sierra as well. You know what? All I need from TPO is to tell me where the inventory is. That's all I need to know. Then I will spend the rest of my day watching the candles. If you have a 1 minute candle chart and some straight lines, and you have the ability to draw a square box, that's all you need. You got to remember, folks, before 1995, right? Before 1995, people used a golf pencil and a piece of paper to trade and had a 15-minute delayed ticker. Okay. Inventory. So, what is inventory? It's slow. I'll answer questions, right? So, if you're selling apples, you have an inventory of apples. If you have selling oranges, you have an inventory of oranges. If you're selling ES contracts, you have an inventory of ES contracts. Remember, Nauman, it's a market. Everybody forgets that it's a market. That's why I'm here to remind you. Keep it simple, right? Inventory and order flow is what moves price, right? The market will have an inventory, dealers will have an inventory, right? When the order flow comes in, the market will react to the order flow coming in. That's it. I have heard good things about that software. I've never tried it though. I keep forgetting the name. Sellers has to go looking for buyers, right? We're in this chop. Right now we're in this chop from 5806 to 5805. It's not tradable. That's another thing. When the market's trading like this, your mind immediately goes into relax mode. So you're not going long, going short, going long, going short. This is wholesale business. Let the market makers and the wholesalers work this out. Let the retail traders who don't understand anything about chop, let them get chopped up in here. You just sit and have a coffee and chill out, right? So we had constant selling at 8. Now I want to see if that 5 half works. Do we catch some bids at 5 half? And does the offer lift? There we go. Right. So what I do in the first hour of my day after I draw up my zones, right? And I have a 5-step method. If you come into the room, we'll show you, right? I'm looking for the sellers to stop selling and lift the offer there. That tells me that the zones are working and I can depend on them for the rest of the day. Right? Do I take the trade here? No. Because I know inventory is above price now. All of the trading in the Globex or overnight session is above where the current price is. So we have downward pressure on the market, right? That is resistance. Because if you were long at 5805, right, 5808, 5810, you're not happy right now at 5806. And not everybody sells at the same time. Remember that. Do we have any news today? I haven't even checked. You'll have to forgive me. I'm on day 3 of this fast. because I'm trying to drop some poundage. Fed speaker, S&P, Schiller home prices, yada, yada, yada. 10 o'clock consumer confidence in new home sales. No, there's no FOMC today. That was last week. How many days to go? I'm going to try and make it till Friday, Moran, or Thursday. I'm going to try and do a 5-day. Yesterday was bad. I was squirrely. My brain was like, woo. After you get past the second day of not eating, it's a lot easier. Okay, back to work here. See, look at that. They stopped selling. They lifted the offer. So let's see where they sell into it now, right? See the offer lifts, boom, there's a print. Do we hit 8? This is rotation, Sing, or whoever was asking, right? There it is, 8. So now the zone works. Now, if we keep going, remember, we still have those pesky sellers here at 8.5, 9. See, look at that. Worked like a charm. Why is the offer lifting? So, Mattis, say you're selling sunglasses at the beach and you sell them at $5 a pair of sunglasses. But then you see 20 buses of tourists all pull up. You're going to raise the price, right? If nobody shows up, you'll put them on sale. Think like a seller. Don't think like a buyer, right? Put your mindset in the mindset of someone who has to sell inventory. What is inventory? Inventory is a supply of stuff, right? These are ES contracts. The chart that you are looking at is just a sales chart showing you the accumulation and distribution of inventory according to the customers that are coming in. Order flow is a fancy way of saying customers. Order flow trading is not a new thing, right? It is the biggest marketing scam ever invented. There's no such thing as order flow trading. All trading is order flow trading. Order flow is just a fancy way of saying customers. The sales chart is telling you on a minute by minute level where the sellers are competing. See? That's all you're doing, right? And then it'll tell you where the sellers stop selling because you just watch that red line, the offer. Watch the offer. The offer tells all. If you look at my X profile, you'll look at my location, it's on the offer. Right? Distributors live on the offer. All we want to do is sell you as much as we can at the highest prices we can for as long as we can. That's it. Distribution. Look below and fail at 5.5. If you're long, put your sell orders out at 7.25, 7.5. Right? So what we do is we'll buy 6, 6.5. Right? If these zones are a little bigger, they're better trades. But you've only got like a 2.75 point zone tonight. It's because it's a tight profile. Don't worry, it'll get better. So what I'm looking to see is can we take out 5802? That's the bottom of the cost basis of yesterday. Right? Can we take this 5802 area out? Yeah, it's been a while, Imran, since we've had a tight profile like this. There's a reason we have a tight profile, right? People were asking about, because look at this, we have a gap, right? If you look at yesterday's low and the high of Friday, this is a massive short position right here. So large traders are not going to build a long position on top of a short position. That's like building a house on sand. You want to see, I want to see today if we come and try and get down here, right? There's two. Here we go. Drop it in. And we're dropping in. As a seller, you want to get rid of your inventory. Very simple. If you run out of buyers, what would you do? Put it on sale, lower the price. Very simple. Have I ever gone into tilt or revenge? No. I was raised in the brokerage business. I've been in the brokerage business and around professional people since 1992, 93. Those words, tilt and revenge, have no place in a business. Because if you go into tilt mode at a brokerage firm, you have the ability to put the firm out of business, and then the next day, maybe 100, 150 people don't have a job. There's a responsibility that comes with running that for some reason has been, I don't know, it's been social media out of you guys, where words like tilt and revenge actually have, people actually pay attention to that crap. Sing, let me ask you something. What do you do for a living? You're a trader for a living? Teaching what? Okay, finance and accounting, right? Do you ever do a revenge audit? Right? If you were a baker, would you ever do any revenge baking? If you were a surgeon, would you do some tilt? Let's do some, I'm bored, right? Let's do some FOMO heart surgery. Say it out loud, and you'll realize how ridiculous this crap sounds. Tilt and revenge are just words for lazy and undisciplined, right? That's all it is. In no other business is it tolerated. People don't think of trading as a business, therefore, they get sucked in to this stupid notion that their emotions are controlling them, which is the biggest load of crap I've ever heard in my life. Because in the brokerage business, when your emotions take over, people lose their job, people lose their homes, people depend on you to not blow up the firm, right? You have a responsibility. It's called the gatekeeper responsibility, right? Yeah, companies with crappy risk management and bad oversight. DJ Trader. Hey, Lone Wolf McQuaid, how you doing? Right? Those terms are ridiculous because they mollycoddle people, right? Think about the people who depend on you, right? Think about it like work. If you think about it like work, all that crap comes to a stop right quick, right? Yeah, gambler mentality. And ask, my partner Ray Dargenio. Ray is a professional poker player, right? So I don't know anything about gambling. I don't like gambling. I would rather be the house, right? I have no interest in going into a casino and giving them my money. Own the casino, that's another story, right? Think like the house. Don't think like a sucker, okay? Very important, right? See how we came one tick to value area low, stopped selling, and the offer started to lift, right? Ah, yes, Kenny Rogers. I used to have a client that looked just like Kenny Rogers. What I want for you folks, I want you guys and ladies to be able to squeeze some money out of this business and not have heart attacks, stress yourself out, blow up accounts. There is no reason to blow up an account, right? Sorry, the seller's right up here. There they are. They're at 4.75. VWAP is just an institutional execution standard. That's all it is. Do I ever stream individual stock names? Um, I don't trade equities, um, but I do have levels for people who do. Um, I've never paid for stock in my life. I've always gotten it for free. So, if I want to get into the equity thing, I'll go do a deal, get some stock and sell it. But I do have levels and I do teach people how to trade if you're interested, in swing trading and things like that. Um, definitely, what was our deal here? Tesla, here's that look below and fail again. We did a look below and fail of 228, rotation up to 261. Nice trade, right? Um, and it helps with your stops as well. What was the other thing? Oh yeah, leather jacket guy's deal. Where's leather jacket guy? Here it is. Right. This was a beautiful trade back in Feb. Look below and fail of 117, rotation up to 130, and we're just doing it now. We have some more overhead inventory though, so we're going to see some selling here in this 124 area. Right. Sorry, what's that, Dave? I don't look at the DOM. I use the DOM to put in my orders. The DOM is another thing that you guys want to be careful with, right? My whole job was manipulating order books to sucker you guys in, which was the level 2 in equities back in the day, right? People think they know what's going on a level 2, they don't, right? Because no trader in his right mind is going to show you their intentions on a DOM or on a level 2 in an order book, right? You'd have to be on crack to show your size in a DOM of your true intentions. It's like showing everybody your cards. in for those poker players. Now, I don't know anything about gambling, but I do know in poker, if you show everybody your cards, that's not the smartest thing to do. I'm telling you guys, that 1 minute chart will give you so much information. Beautiful, simple information, right? And you don't have to learn patterns and all that stuff. And I'm not knocking technical analysis, but wouldn't you like to understand the reason why your pattern works? So you don't just blindly trade the pattern, you know when to get out of the trade? Yes, we have other rooms, we have equity rooms and things like that. What's my time horizon for a swing trade? Whatever you want. I'm thinking generally holding it overnight. Now, Chuck Norris, you're talking to a guy. I have holding. I don't like holding on to stock even when I get it for free, right? So it's I want to turn that stock into cash as quickly as I can. I am a wholesale distributor, right? That's my whole life, right? That crap's burning a hole in my account. Get where there's a bid, right? That's why also on my Twitter profile, this is a look above and fail of 5.5. So if you're short the fives, right? As long as we stay offered under 4 3/4, you're good to go, and we're going to come test that overnight low. If we offer up back over 5.5, then you know to scrub the trade. Not the greatest trading environment tonight, but it should break loose in a little while, and we should have some better order flow as more people wake up. What time is it in New York now? 4:25. When's the time change in England, Raj? Is it this weekend? We go forward an hour? Okay, thank you. So this Zoom that you're on now will be on at 2:30 in the morning Eastern time as opposed to 3:30 in the morning. Market makers on the ES, they're just there to provide you liquidity. That's it. There's no market makers don't make the donut. All they do is they take the donut and pass it to you. There's no shenanigans. They don't need to. Jane Street made $16 billion last year. Trust me, they don't give a flying crap about your order. Okay? What they care about is flow. You want to run as much volume through a spread as possible. They could care less about our stops, right? All that market maker shenanigans, that's from the 1990s. I don't mention it because there are no market maker shenanigans now, because there's maybe 20 market makers left out of thousands that used to exist. So, right? It's just, listen, if you were a stock trader and you went to a market maker and you wanted to buy 1,000 shares of a stock at $5 and there was no market maker, you'd buy 100 shares at 5, 100 at 5.20, 100 at 5.50, 100 at 6, right? A market maker just will sell you all 1,000 shares at $5. If they don't own it, they'll short it to you. That is the concept of providing liquidity to a customer. That's all there is to it. Right now, in the old days, we used to have predatory market maker like Fierro Brothers, right? Where they'd come and they'd like short a deal and pound it into the ground. But that was before 2005 when they had regulation SHO, right? Regulation SHO means that now you have to have a definitive borrow in order to short a stock. You can't short it naked. So all of that stuff and the consolidation of the liquidity business, right? You've got Citadel, Virtue, Jane Street, Bank of America, Susquehanna. They own, they have billions and billions in capital. They have the sophistication, they have the algorithms. It's all run by machines now, which is nice for us because it makes it very, very precise, right? Look at the precision, right? Yeah, that whole market maker hoo-ha is all that's all BS from the 90s. It's all been all of those market makers who used to be predatory, they're all sitting on the beach in Florida or they're selling burritos in Denver or they've passed away. Yeah, trade the business thing. Don't let them fool you with all this double talk, folks. That's a poor low. See? Do you see how that N and O period are at the same price here and here? That means there's competitive buying. So the sellers just stop selling and raise prices, and the buyers will chase. Support is caused by the lack of supply. The lack of supply is caused by the seller recognizing that there are buyers here and lifting prices to take advantage of it. Simple. Come visit us, folks, at microefutures.com. The other thing is I'm starting a new mentoring class next week. Um, and I'll be looking for one person. It's a lifetime thing. So I'm going to be letting one person in for free. And so if you guys are interested, DM me, let me know. And also, if anyone is serious about mentoring, please DM me at VWAP Trader 1 or in the room. I will do it. I'll hop on a phone call with you and discuss a plan for your specific trading needs to get you profitable. And we don't care how long it takes, we work with you until you're profitable. Thanks, everyone. Have a wonderful morning. Trade safe out there, and we'll see you at RTH in a few hours. Thanks, folks. Bye for now.